It is a very busy day on Wall Street, so let's get right to the top 3 things that you need to know as the clock hits 9 a.m. Futures are in massive rally mode after CPI rose less than expected in November. The consumer price index rising just 0.1% from last month. Economists were expecting 0.3% in a rise. It's the slowest increase in more than a year.
November CPI 7.1%. This article is from Yahoo Finance. Consumer prices rose less than expected in November, the second straight month inflation. Pressures moderated more than anticipated by economists. The consumer price index CPI for November showed a 7.1% increase in prices over the last year and a 0.1% increase over the prior month. The Bureau of Labor Statistics said Tuesday economists had expected prices to rise at a 7.3 clip over last year and a 0.3% month over month. Per Bloomberg data, on a core basis, which stripped out volatile food and energy components of the report, which for some reason does not get added to the final CPI number. I wonder why. I digress. Let's continue, guys. Prices climbed 6% year over year and a 0.2% over the prior month. Consensus estimates called for a 6.1% annual increase and a 0.3 monthly rise in the core CPI reading. The report propelled U.S. stock forward and sent Treasury yields lower as Wall Street weighed the implications of softer prints on Federal Reserve policy. While November figures showed a modest deceleration in inflation, the cost of essential items and housing facing U.S. consumers still remain stubbornly high. Let me repeat that, guys. The cost of essential items and housing facing U.S. consumers still remain stubbornly high, guys. You get it?
Emotional, damn it!
Come on now, dog.
Thank you guys for following this channel. You guys are special. You don't fall for the bull. You know this is gaslighting, and we will come out on top. Keep thriving, and let's continue. So this CPI number still above the Federal Reserve's long-term price stability target of 2%. The central bank is expected to lift the target range for its benchmark interest rates by an additional 50 basis points in December. So let's all see this in action. Bear with me. So let's see more together. And then we can use whatever information possible to succeed in these crazy times. Editor, roll clip, fair use.
We are at 8:30 Eastern, and the numbers are out. Up only 1/10 on headline. Up 1/10 on headline. Remember, the high water mark here was in June of 22, a 7-year high at 1.3. If we look at ex-food and energy core, also cooler than expected, up 0.2. High water mark here was in April of 21 at up 0.9. If we look at year over year, up 7.1. 0.2 cooler than 7.3, 0.6 cooler than the rear view mirror at 7.7, and it's a full 2% under 9.1. That was in June. That was a 1981 comp. And finally, in my opinion, the area you're supposed to pay the most attention to, CPI ex-food and energy core, year over year, up 6%, expected to be up 6.1, rear view mirror 6.3, and prior to that was the 40-year high at 6.6 in September. So this is the most recent sticky aspect of CPI. It's now at 6%. So it's only 0.6 lower than 2 months ago, which was the high water mark for 4 decades. But indeed, they're coming down. And remember, I gave you all the high water marks here. If you think back to last week's producer price index, everything peaked in March, and the entire series started to move almost in unison. This isn't quite the same, but the moves in the pre-market, Joe, were spot on. Spot on. We've dropped now below 420 in a 2-year. We're hovering at 343 in a 10, and Dow futures zooming with their last prices right under 35,090, 35,000 now. Here it goes. Looks like it's going to challenge 35,100, and it's flying. Main reason, listen, folks, inflation's too high. The Fed's nervous. They're going to keep erring on the side of scaring you as to how aggressive they're going to be. However, if you just take the numbers on face value, you look at the trends, and you consider the reasons why inflation was up, there's many reasons to hope it's going to keep moderating. The trick is it's going to moderate to levels that are still going to be much higher than pre-COVID. At least that's my opinion. Back to you.
Hey, here is your closing bell.
That wraps up today's wild trading day. All three of the major averages ending in the green, but well off their highs. The S&P was up nearly 3% at the highs of the session, closing up less than 1%. The Nasdaq up just about 1%. The Dow up 105 points. The movements today coming after that CPI report that we got this morning showing inflation cooling in the month of November. Let's talk about it, what it means for the markets here going forward. For that, we want to bring in James Liu, Clearonomics founder and CEO. James, it's great to have you here at the desk. So help us make sense of the market action that we saw today. A lot of euphoria shortly after the open, clearly losing steam quickly. What do you think it was that changed the market's mind?
Yeah, I mean, Shauna, there's a lot of mixed feelings about these reports. Is good news or is it bad news?
Yeah.
That's really what the market's trying to figure out, because this was a good report. I mean, we've talked it to death so far today, but the annualized rate for this monthly number was about 2%. So if we keep this up by the second half of next year, we could get down to 2 to 4%, which would be amazing and the best case scenario. The problem with this is that you still have the question on the Fed. There's really no question about what they'll do tomorrow with 50 basis points, but then what do they do next year? And a question about recession. I think that's the biggest divide in the market right now. A lot of folks think there will probably be a recession in 2023. We're not really in that camp. We still see a lot of strength, especially with today's numbers, but still shallow growth. And of course, that's creating dispersion in what people think might happen in the equity markets.
Hey guys, it's Jose, your regular Joe Blow again, keeping an eye out and my ears open. And boy, oh boy, oh boy, oh boy, do they continue hard to push their narrative. But that's okay, because we will take whatever they tell us and fit it into our lives and better prepare for opportunities. And not yet, guys. These guys are making it slippery to try and trick us, telling us that all is getting better. So if it's getting better, prices should come down as well. But we know it's all just getting us comfortable to accept these prices as the new normal. So guys, more coming. Do your research and believe that you will win. Thank you for the support, and I'll continue to do my best to bring you the best. As always, stay free.
It ain't hard to tell. I excel, then prevail.